balance consists basically of two sections. We will have the financial position account section, and in that section, all your assets, all your equity, and all your liabilities will appear into that section. All your equity accounts, remember your equity accounts will be capital and drawings. All your asset accounts, in this example, we've got buildings, equipment, the vehicles, fixed deposit, inventory, trade receivables, and the bank. That will be your assets. Your liabilities, in this example, I've got trade payables and your loan account. So when we speak about the financial position account section, that will be all your assets, all your equity, and all your liability accounts. Your nominal account section, which is the second section of your trial balance, this is where you will show all your income and all your expenses. Take note of the fact that income accounts must have credit balances. The income accounts in this example, sales is income, purchases returns is classified as income, rent income 24,000 Rand, that's an income account, settlement discount received, that's income, and interest on fixed deposit, that is income. Your expenses will appear all on the debit side. So when we do our statement of all our financial statements, the information that we will work with is, of course, the trial balance, which is a summary of all the transactions that has happened during the course of the financial year. Back to the formats now, guys, of our financial statement. And the first financial statement that we are going to focus on, guys, will be the statement of profit or loss and other comprehensive income. On page 1, guys, we take a look at the format of that statement. So when we take a look at the format of the statement, remember now, when we speak about the formats, guys, formats is a definite. You can't change the format of your financial statements. This is something that you will have to study. You can't come up with your own formats, okay? There's a specific way in which the financial statements must be presented. And in order for you to comply with that, you must take a look at all the information, guys, that will be supplied to you, and you must present the financial statements in this format. So the statement of profit and loss and other comprehensive income starts off with the revenue. We are looking for the revenue amount. And in order to get the revenue amount is equal to the sales amount minus the sales returns minus settlement discount granted. Remember, settlement discount granted is also in some questions referred to as settlement discount allowed. And that will give you the amount of revenue. In an exam, guys, you need to show the calculation there. So you show the calculation of sales, sales returns, settlement discount granted, and that will give you then the final answer then for your revenue. You subtract your cost of sales, and cost of sales is a calculation. This is a calculation, guys, that you must know. You must know the calculation here. So when we speak about the cost of sales calculation, cost of sales is equal to the opening inventory plus your purchases. But when we speak about purchases, we are looking for the net purchases. And net purchases is the purchases minus the purchases returns minus settlement discount received. Remember, settlement discount received must be subtracted from purchases. The logic behind that, guys, is the following. If you buy something for 1,000 Rand and the supplier gives you a 40 Rand discount, then you actually didn't buy the stuff for 1,000 Rand. You bought it actually for 960 Rand. So if you want to calculate what is your net purchases will then be the purchases minus the settlement discount received in my example that I just had now. Okay, so when we talk about the net purchases here, guys, the net purchases will then be the purchases minus purchases returns minus the settlement discount received. Back to your cost of sales calculation now, guys. Cost of sales is equal to the opening inventory plus your purchases amount plus your import duties or carriage on purchases or freight on purchases. Now those items there, guys, we are referring to all the costs that the business will incur in getting the stock to the premises. Whether we must pay for import duties, carriage on purchases, freight on purchases, sometimes we've got a railage on purchases or insurance on purchases. All of those items is added to the cost of sales. And then lastly, guys, we subtract the closing inventory. Subtract the closing inventory, show it in brackets, okay? And that is the amount then of closing inventory that must be subtracted. You block all of those items there, guys. Block all of that. So you will have the cost of sales is equal to the opening inventory, get an amount there, plus your purchases, plus your import duties if there is, plus your carriage on purchases, minus the closing inventory. Show that in brackets. It's a minus. All of those items there, guys, you block. You put it into a block like that. And if you block that, guys, the answer that you will get there is the answer for cost of sales. And that cost of sales you will indicate in brackets. So let me just go over this first section again. It is the revenue minus the cost of sales. So you will get a revenue amount over there minus the cost of sales. Now, cost of sales in itself is a calculation. It is opening inventory plus the purchases plus import duties plus freight on purchases minus the closing inventory, and that will give you your gross profit. So in order to calculate your gross profit, you take your amount of your revenue minus your cost of sales. So revenue minus your cost of sales, that will give you your amount of your gross profit. And that is like the first section or the first part of your statement of profit and loss and other comprehensive income, where you must just calculate the gross profit. Right, let us apply this quickly, guys. Let us apply this quickly. You are quite familiar now with calculating the gross profit. Gross profit is your revenue minus your cost of sales. Cost of sales in itself is another calculation. So let us apply this now, guys, by doing the example that I've got for you on page 3. We're taking a look at the information on page 3, the question on page 3, and I'm going to go through that question then with you. Right. The name of the business on top, statement of profit and loss and other comprehensive income for the year ended, and then we will start with our revenue amount. To calculate the amount of revenue, we are looking for the net revenue. So revenue is equal to the sales amount. So you put in the amount there, 440,000 minus the sales returns of 4,600 minus settlement discount granted or settlement discount allowed, which in this instance here is the 800 Rand. So you will have your revenue amount is then 440,000 minus the 4,600 minus the 800 Rand, and that will give you a net revenue amount then, guys, of 434,600. Revenue is equal to the sales amount minus the sales returns minus settlement discount granted or settlement discount allowed. Okay. Next, we are going to calculate our cost of sales. And cost of sales, remember now, guys, you must know this off by heart. Cost of sales is equal to opening inventory plus purchases plus the carriage on purchases minus closing inventory. Okay, that will give you your cost of sales calculation. So let us go back now, guys, to calculate the cost of sales now in this example as it is here. So the cost of sales is equal to opening inventory. Go to the question, and you will see that the financial year has ended on the 28th of February 2019. So that financial year has started on the 1st of March 2018. The 1st of March 2018. So we are looking for the value of inventory on the 1st of March 2018. And if you go into your financial position account section, you will see that the value of inventory, guys, on the 1st of March, you will see that that value of inventory was 55,000. Put that down as the opening inventory. All okay on that amount there? All still okay? Can I continue? I just want to see something.
I'm going to eat around the corner, so let's go and sit there. That's for 2 minutes. I'm studying. Okay, sir.
Sorry, is it me or what's happening now? Can anybody hear me?
Yo, I don't think it's only us though. I think everybody cannot hear the lecturer.
I think,
Okay.
morning, Mr. Les, John Abrams here. I think there was somebody in the background that didn't put off the mic, and so that caused quite a bit of noise. But I think you can continue now because I think you're clear. Students, you just need to mute their mics. Mr. Les?
It looks like he's on hold though.
I'll try to get hold of him, students, just hold on.
Okay.
Can I ask you, Jonas, to switch off your camera, please, man?
Where is he now? Okay, I'll have to ask Richard to. Oh, he's on hold.
Students, we are trying to get hold of Mr. Lesh. He seemed to have muted him or put himself on hold. So one of our digital learning advisors will contact him. So please just bear with us. He should be back within the next few minutes.
No problem.
Can you see me now? Are we okay? Okay.
Okay. You're on the session again, yeah.
Are we back on? Okay.
Yes.
Right, guys. Let us just continue. This is the problem, man. Right, guys. I'm still busy with this actual statement here. Let me just repeat what I've just said now in the last few minutes, guys. After calculating the gross profit, we are on to other income now. You list all your other income that you may get. And remember, when we are speaking about the income, go to your trial balance and we are looking for all the accounts, all the nominal accounts with credit balances. That will be all our income accounts. Right. Our next heading.
I'm sorry, Mr. Les.
Yes.
I'm sorry, Mr. Les. I
Yes,
think we
I
lost
can hear you.
connection. I think we lost
Can you hear
connection
me?
when we. Yes, I can hear you. I
Okay.
think we lost connection when we were talking about the opening inventory.
Okay, that was some time ago, eh?
Yeah, that was some time ago.
Okay. Okay. Right, guys. I'm just going to. I think there was a bit of a problem, so I am just going to go back to summarize what I've done so far, and then I'm going to take it from there. Right. We are busy with the statement of profit and loss and other comprehensive income. Remember, our question of today is that we are only focusing on the actual format. So in order to get your format, we start off here with your revenue, which is your sales amount minus your sales returns minus your settlement discount granted, and that will give you the 434,600. Then you must do your cost of sales. Cost of sales is a calculation, which is opening inventory plus purchases plus the carriage on purchases minus the closing inventory. So your opening inventory is given to you in your trial balance. That is the value of inventory on the first day of the financial year. And that's the value of inventory on the 1st of March 2018. For purchases, we are looking for net purchases. Net purchases is then equal to the purchases minus purchases returns minus settlement discount received. And that will give you your net purchases of 221,500. You are now looking for other costs that you may have incurred in getting the stock to you, such as railage on purchases, or freight on purchases, or insurance on purchases. But in this example, there is carriage on purchases, 4,300 Rand. Then closing inventory, and your closing inventory is 28,300. Closing inventory, that information you will get under your additional information. So guys, now we have calculated the cost of sales. So cost of sales is equal to the opening inventory plus the purchases plus the carriage on purchases minus the closing inventory. And that will give us cost of sales. Revenue minus your cost of sales. So we have calculated the revenue amount minus the cost of sales amount is giving you your amount of your gross profit. Okay. The next heading, guys, is our other income. I think everybody is on par now. Let me just get back now as far as our other income is concerned. In the question, you are now looking for all your other income. And if you are looking for your other income, remember, other income you will get now from your trial balance, and it is nominal accounts with credit balances. That is your income. Your next heading, guys, is called distribution, administrative, and other expenses. But we are now going to list our expenses. And when we speak about our expenses, guys, we are differentiating between two groups of expenses. We get finance costs, bottom here, guys, finance costs. And finance costs consist only of interest on loan and interest on overdraft. Those are our two finance costs. All the other items, all the other expenses, you list under distribution, administrative, and other expenses. So once again, guys, go to the question, go to the trial balance, you list all the applicable expenses there, you block them, whatever you may have, add them up, and that will give you your amount of distribution, administrative, and other expenses. And because it must be subtracted, you show that amount in brackets. The same applied to your finance costs. Go to your finance costs. Look for all the finance costs. If there is interest on loan, if there is interest on overdraft, you block them and you add them up and you put it under finance costs. And because it is an expense that must be subtracted, you put that amount also in brackets there. Okay, so guys, let us just get back now to the question that we are busy with. I'm doing the question on page 3, and let us now continue with that statement, and we are going to try to finish that statement. After the gross profit, our next heading is your other income. Now go to your question again. Go to your nominal accounts, which are at the bottom. And income accounts has got credit balances. In your question, you will see that there are 5 accounts with credit balances. There's sales, there's purchases returns, there's rent income, there's settlement discount received, and there's interest on fixed deposit. Now, the sales, the purchases returns, and the settlement discount received, we have accounted for that already when we calculated the gross profit. So now the only other income accounts that we do have here, guys, would be the income account for rent income. And your trial balance will show you that rent income is 24,000. There's interest on fixed deposit. And your interest on fixed deposit here, guys, if you go to your trial balance, you will see that the interest on fixed deposit is an amount of 12,000 Rand. You block that. Those are the only 2 income accounts. So your income accounts, your total income, your amount of other income, therefore, is then the 36,000 Rand. So that is your heading then there, guys, for other income. Our next heading is for our distribution, administrative, and other expenses. Remember now, from the trial balance, all your expenses is listed under on the debit side of your trial balance. So you go to your trial balance, go down the list. The first expense there is purchases. We accounted for that under cost of sales. Carriage on purchases, we accounted for that under cost of sales. Sales returns, we have also accounted for that when we did our calculation of our net sales. So my first expense that I see there is my expense for salaries and wages. So my salaries and wages is the amount of 123,000 Rand. My next expense in the list there is telephone. My telephone expense, as per trial balance there, my trial balance will show that my telephone expense is the amount of 9,600. My next expense is interest on mortgage loan. But remember now, interest on loan is not part of my distribution, administrative, and other expenses. Interest on loan has got its own section at the bottom, and that section is finance cost. So we are not showing that as part of my distribution, administrative, and other expenses. My next expense, settlement discount allowed. Remember, that was settlement discount allowed. We decreased that amount from sales. So I've got bank charges as my next amount. Bank charges is 2,400. My next amount on my debit side is stationery. My stationery expense is 3,600. My next expense that I do have after my stationery is my insurance. My insurance expense amounted to 8,400 Rand. And my last expense there, guys, on the debit side is my expense for 6,500 Rand. So I have now listed all my distribution, administrative, and other expenses. Remember, it is all the expenses, guys, on the debit side of the trial balance. The nominal accounts with debit balances, those are all my expenses. I add that up quickly, guys. Block it, you put it into a block over there, like I've got over there, and then I will say that my distribution, administrative, and other expenses amounted to 153,500 Rand. You put that, of course, now in brackets, and that is my distribution, administrative, and other expenses. My next heading is my heading for finance cost, and we have seen that we have only got interest on loan, and the interest on loan amounted to 16,800 Rand. That was my amount for the interest on the loan. I block that because once again, we may have other finance costs as well. Remember, the only other finance cost that you guys can get will be the interest on overdraft. And in this question, there was no interest on overdraft. We block now.
Sorry, Mr. Lesh. Can you kindly share your screen? I think that went missing somewhere. Can you kindly share your screen, please?
Yeah, okay, let me just try and do that.
Sorry for the interruption.
Can you see me now?
We can see you, but we can't see the screen that you've shown earlier.
Okay. Okay. Hey, we've got lots of gremlins here. Can you see that screen now?
Thank you very much.
Okay. Right. So I don't know how far, what you have missed so far, but what I've done is that I've completed the exercise. I've put in the other income. There were only two. I've put down the distribution, administrative, and other expenses. I've put down my finance costs. And now I'm going to calculate what is the profit or the loss for the year. So to calculate the profit or loss for the year, I'm going to take my gross profit. So on your calculator, you will have 182,100 plus your other income of 36,000. 182,100 plus your 36,000 minus your distribution, administrative, and other expenses of 153,500. Subtract now your finance cost also of 16,800. And that will give you then an answer. So let me just do that again. 182,100 plus the 36,000 minus 153,500 minus the 16,800. And we will have an answer then here of 47,800. That 47,800, guys, is a positive amount. First, calculate the amount, which is then the 47,800, and thereafter you will label that. And because that amount is positive, you will label it as the net profit for the year. If your final answer over here was a negative amount, you would have labeled it as the net loss for the year. Okay, guys, and that will take care of our statement of profit and loss and other comprehensive income. I've got the revenue there, minus the cost of sales. Remember, cost of sales was a calculation. Revenue minus cost of sales is your gross profit. Then you will have your other income. Block that, add it up there. Now you work with your expenses. There are two categories of expenses: distribution, administrative and other expenses, and finance costs. Remember, the finance cost is only for the interest on loan and interest on overdraft. Everything else you show under distribution, administrative and other expenses. In this question, the distribution, administrative and other expenses consisted of salaries and wages, telephone, the bank charges, stationery, insurance, and advertising. Block all of that, add it up, and that will give you your distribution, administrative, and other expenses. Your finance cost, 16,800, guys. Block that, and that is the interest on loan is your finance cost. Calculate your answer. The answer is then, to get your answer, it is the gross profit plus other income minus distribution, administrative and other expenses minus the finance cost, and that will give you an answer, which in this case is 47,800 Rand, which is a positive amount. And if this amount is positive, guys, we call that the net profit for the year. If your answer here is a minus, a negative amount, you will label it as the net loss for the year. Okay. But guys, that will take care of our first financial statement, guys, which is called the statement of profit and loss and other comprehensive income. If you've got any queries, guys, remember you can just email me and then I will answer that. Just a reminder about the email address for those of you that is not attending the classes. The email address is FAC1501, FAC1501 S12020@gmail.com. I will also put that up for you guys at the later stage, so that you can email me then with any questions that you may have. Right, guys, we are focusing now on our second financial statement. And for that purposes, guys, I'm taking you back to the notes. And I am on page 2. At the bottom of page 2, guys, we take a look at the statement of changes in equity. That is the second financial statement, or the statement of changes in equity. Now, remember, the purpose of this statement, guys, is just to see what has happened to the capital. What was the value of capital at the beginning of the year, and what is the value of capital at the end of the year? So that is the purpose of a statement of changes in equity. We want to see how the statement, how capital, because remember, we're speaking about equity, and we are doing the books of a sole trader. So when we talk about equity, the equity of a sole trader consists only of the capital. Right, so guys, this statement starts with capital, the balance at the beginning of the year, add or subtract a movement. Now, a movement refers to any increases or decreases of the capital during the course of the year. Any increases or decreases to the capital during the course of the year. So guys, let me just quickly give you an explanation of what I'm saying there. If I give you a trial balance, and this trial balance is dated the 28th of February 2020, and I give you a capital balance there, and I tell you that the capital balance is 380,000 rand. And I give you additional information. And my additional information states the following. The owner increase his capital during the course of the year and sometimes they will give you a date. Say now he increased his capital on the 1st of September 2019 and he deposited 60,000 rand into the bank account of the business. Right. Now this 380,000 rand that you see here is the balance on the 28th of February 2018. And the balance on the 28th of February, that is the closing balance. If he has increased the balance during the course of the year by 60,000 rand, then you must understand that that 60,000 rand is included into the 380,000 rand that you see there. That 380,000 rand is at the end of the year. He increased his balance by 60,000 rand during the course of the year. So when you do the statement of changes in equity, and in your statement of changes in equity, you start here and you say the capital balance at the beginning of the year. Your capital balance at the beginning of the year, in my example over here, will not be 380,000 because that is the balance on the 28th of February. My capital balance at the beginning of the year will be 320,000 rand because that is what the capital value was on the 1st of March 2019. And then I will have a movement. I'm now going to add here an addition to the capital because the owner has increased his capital during the course of the year, and my movement here in this exercise will be the 60,000 rand that he has contributed during the course of the year. That is just to give you guys an explanation of the movement. So we will have in your statement the capital balance at the beginning of the year. We must add the movement. We must add your profit for the year. If you have made a loss, it must be subtracted. So remember now, this information is coming from your statement of profit and loss and other comprehensive income, because that is where you will find your profit for the year. So just to go back here, guys, we will have the opening balance of capital. add or subtract now a movement. Add the profit for the year minus your drawings. And your answer that you will get there, that answer is called capital, the balance at the end of the year. And that is your statement of changes in equity. Remember now, when we talk about the statement of changes in equity, we just want to know what was the value of capital at the beginning of the year, what's the value of capital at the end of the year. The accounts that may impact on this balance and the change in the balance here would be either an addition or the profits or the losses minus the drawings. Okay. Guys, I'm going back now. Just get back here. I'm now going to go back to the exercise that we are busy with, guys, and I am now going to do the statement of changes in equity. We do the statement of changes in equity, guys, on your answer sheets that you will also have there. I am now just going to do that. I hope that is clear now. Right, on this statement now, guys, I will now have the capital balance at the beginning of the year. Now, there is no information to tell us that the capital has changed during the course of the year. So the capital balance at the beginning of the year and the capital balance at the end of the year is the same amount. So my capital for the year is 280,000. Capital balance at the beginning of the year, 280,000 rand. My profit for the year, we have calculated the profit for the year in your statement of profit and loss and other comprehensive income, 47,800 rand. And the 47,800 rand, guys, that is your profit for the year. The drawings for the year, go to your trial balance, you calculate your drawings for the year, and the drawings for the year is an amount of 20,000 rand. Because the drawings must be subtracted, guys, you will show the amount in brackets. The amount of your drawings must be indicated in brackets. Calculate that amount, it's the 280,000 plus the 47,800 minus the 20,000 rand, and that will give you an amount of, something is not right. 280,000 plus 47,800 minus 20,000 rand. Guys, something is not right here. Okay. I just want to share something else here with you guys. I just want to get back to
I am thinking that maybe the amount of drawings is too much, don't you think?
No, 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 no. Guys, there's definitely an error in your just go back to, okay, I am just doing my calculations here. I think my calculations went haywire here. I've got revenue as 444,000. Okay, there's a mistake. Just go to revenue, guys. Revenue is not 440. I made a mistake that most students will also do. That amount is 444. If you just go back there, can you guys see that? The revenue amount is not 440,000 as I've got it, but the revenue amount is actually 444,000. I made a mistake there, guys. And that will give me 438,600. And my gross profit amount is wrong. Gross profit should be 186,100. I'm out by 4,000. Just due to that mistake that I've made over there. And therefore, my gross profit here, or my net profit, guys, is 51,800. Apologies for that, guys. That amount must be 51,800.
Sorry, Mr. Lees.
You're
Yes.
able to see that on your screen?
Can you guys see it?
No, we can't.
No.
Okay, let me. Okay. Do you guys see me now?
Yes.
Yes.
Okay. Can you guys see it now on the screen?
No.
You see nothing now?
No,
Okay.
you don't see anything.
Can you see me now?
Yes.
Right. Guys, this is an absolute nightmare. Okay. Can you guys see the screen now?
Yes, we can.
You can
There
see
you
the
go, yes.
screen.
Thank you. Yes.
Okay. I'm going to go out now because I don't want you guys to see that. I am looking, share the desktop now. And can you guys see that?
Yes.
Can you guys see?
Yes, we can.
Okay, right. The mistake was here by revenue. That revenue amount is 444. I had it as 440. And the result is now that your profit for the year is 51,800. That is the correct amount. So I am going to have the profit for the year is now 51,800. So your capital balance at the end of the year will then be the 280,000 plus 51,800 minus 20,000 Rand. And that will give you a capital balance at the end of the year of 311,800. 311,800, guys. And that is your capital balance at the end of the year. And that will conclude, guys, that statement here. All right, guys, that is then your statement of, I just don't know. Can you guys see me? Or not at all?
I cannot see you, Mr.
Okay. Okay. Can you guys see me now?
Yes, but then we can't see the other sheets.
Okay. Right. So right, guys. So that is our second statement, which is called the statement of changes in equity. Okay, can you guys see that now? Any comment from anybody?
Yes, I can see it, sir.
Okay, so you can see the statement. Okay, right, guys, we are taking a look now, guys, at our third statement now, which is our last statement. And our last statement is called then the statement of financial position. Remember now, we are back onto our information. And when we are talking about the statement of financial position, we want to know what is all our assets, all our equity, and what is our liabilities. That is what we are looking for when we do a statement of financial position. Just to get back once again, guys, to the format of your statement of financial position, I'm referring you now, guys, to once again, page 2 of your notes. So when we talk about our statement of financial position, guys, the format, the top part is our assets. Under our assets, remember our assets, we get two kinds of assets. We get non-current assets and we get current assets. Under your non-current assets, you must show your property, plant, and equipment. Remember that, guys, it's format. You must have property, plant, and equipment. You can't come up with something else. Property, plant, and equipment, and then you must show the calculation for property, plant, and equipment. At the bottom there, guys, under number 1, you will see that property, plant, and equipment, it is the buildings, the equipment, the vehicles, the furniture, shelving if you've got. All of those items there, guys, that will make up your property, plant, and equipment. Show the calculation and get an amount there for property, plant, and equipment. Then we have got other financial assets. If you've got any fixed deposits, you will have to put that there as well. So your non-current assets will consist of your property, plant, and equipment and your fixed deposits, and you add that up, and that will give you your non-current assets. Your current assets, on the other hand, guys, consist of 4 categories. You've got inventory, trade and other receivables, prepaid expenses, and cash and cash equivalents. Under your current assets, guys, you are having your inventory, and your inventory can consist of 2 items. It can consist of closing inventory, the value of stock at the end of the financial year, plus any consumable items that you've got on hand. Now, consumable items on hand will be under your adjustments, which we will discuss in our next lecture. It could include items such as stationery or packing material that is still left at the end of the year. That will be part then of your inventory. Trade and other receivables, guys. Trade and other receivables will consist of your trade receivables minus your allowance for credit losses plus your accrued income. Now, allowance for credit losses, accrued income, those are adjustments which will be discussed in our next lecture. The same with prepaid expenses. Prepaid expenses, I will also explain that. That is an adjustment, and that we will explain in the next lecture. The fourth category of my current assets, guys, is cash and cash equivalents. And cash and cash equivalents consist of the money in the bank, the petty cash, and the cash flow. That makes up your cash and cash equivalents. So I'm under my current assets now, guys. And under my current assets, I will have the following now. I will have inventory, trade and other receivables, prepaid expenses, cash and cash equivalents. You add all of that, put it in a block, and that is your amount then of your current assets. The top part then of your statement of financial position is where we want to know what is our total assets. And if we want to calculate our amount of our total assets now, our total assets is equal to the non-current assets, that total, plus the total of our current assets, and that will give you your total assets. Okay. So guys, we are busy with our statement of financial position. The top section of our statement of financial position is where we will show all our assets. We get two categories of assets. You get non-current assets and current assets. Non-current assets will be your property, plant, and equipment, as well as your financial assets, such as your fixed deposits. Under your current assets, there are four categories. It is the inventory, trade and other receivables, prepaid expenses, as well as your cash and cash equivalents. You block all of that, and you will call that now your current assets. You take your non-current and your current, and you add it together, and that will give you your amount of your total assets. So I'm going to apply this now, guys, to the question that we are busy with. And I am now going to start with my statement of financial position. And I am just going to do the top section, which is my asset section. So you will have assets, non-current assets, and then your property, plant, and equipment. Property, plant, and equipment in my example here, guys, will consist of my buildings of 360,000 Rand. Plus, I've got equipment of 90,000 Rand. Plus, vehicles of 185,000 Rand. So I will take now the 360,000 plus the 90,000 plus the 185,000, and that will give me property, plant, and equipment. And my property, plant, and equipment, guys, is the amount of 635,000. In this example over here, guys, it is the buildings. Just want to take this. It is then, guys, the buildings and the equipment and the vehicles, and that will give me property, plant, and equipment of 635,000. Also, under my non-current assets, I have got a fixed deposit, and the fixed deposit here, guys, amounted to 60,000 Rand. You will see it there, guys, from your list. In your trial balance, you will see the fixed deposit is 60,000 Rand. You put that in a block, and your non-current assets is the amount of 695,000 Rand. So you add your property, plant, and equipment and your fixed deposit, and that will give you non-current assets here, guys, of 695,000 Rand. Your current assets. Your current assets consist of your inventory, but remember now, we are looking for the inventory at the end of the year. This statement we prepare at the end of the financial year. That is why we want to know what is the value of inventory at the end of the year? And remember, this was under our additional information. This is the closing inventory. And the closing stock is 28,300 Rand. Trade and other receivables in this example consist only of my trade debtors, my trade receivables, and that amounted there to 28,000 Rand. In this exercise, there's no prepaid expenses. Remember, we will only discuss that in our next lecture. And my cash and cash equivalents, guys, consist only of the bank amount. And the bank amount is 43,500 Rand. Remember, cash and cash equivalents can consist of bank, petty cash, and cash flow. In this example, it is only the amount of bank, guys, and my bank amount is 43,500. I block all of that, and that will give me a total amount of current assets. And my total amount of current assets is now 99,800 Rand. To get down to the top part now, guys, of my statement of financial position, I want to know what is my total assets. Total assets is then equal to my non-current assets of 695,000 together with my current assets of 99,800. Add the two sums there together, guys, and that will give me total assets of 794,800 Rand. 794,800 Rand, that is the top part of my statement of financial position. That is the asset section. Right. Okay, guys, that will take care of the top part of my statement of financial position. The statement of financial position, guys, that was just then the asset section. We are going back now, guys, to our statement of financial position. We are now going to do the bottom section. And I'm referring you once again, guys, to the notes on page 2. We are now going to do the bottom section of the statement of financial position. And the bottom section is called equity and liabilities. Equity and liabilities. We first of all take a look at our equity. And your equity is your amount of capital. We want to know what is the balance of capital at the end of the year. And remember that balance of capital, we calculated that already in our statement of changes in equity. So from the statement of changes in equity, you show the amount of capital, block that, and capital is also your equity. So your equity will consist of capital. And if you want to know what's the capital amount, capital comes from the statement of changes in equity, and that is your equity amount. Okay. Now we focus on our liabilities. We get two kinds of liabilities. We get non-current liabilities and we get current liabilities. Non-current liabilities, guys, can consist of your long-term loans. Okay, your mortgage loan or your long-term loan, that is non-current. Okay, you've got more than 12 months to pay that money back. That is why it falls under the category of non-current, long-term. Put down the amount and you block it, and that is then your amount of non-current liabilities. So you've got non-current liabilities there as an answer over there. equity is also an answer. Let us take a look, guys, at your current liabilities. Current liabilities, guys, can consist of trade and other payable amounts, trade and other payables. And to get the amount of trade and other payables, guys, you will have to look for, just look at the bottom there, I've got the trade and other payables. Trade and other payables will consist of your trade payables control account. If there's any accrued expenses, and if you've got income received in advance. Accrued expenses, income received in advance, those are adjustments, guys, which I will explain in our next lecture. So at this point in time, trade and other payables consist only of our trade payables control account. Your next category here, guys, will be your financial liabilities, but you can change this, guys, to bank overdraft, because it creates a bit of confusion over there. You can change that heading there, guys, to bank overdraft. Remember, as far as your bank is concerned, guys, your bank can have a debit balance or your bank can have a credit balance. If your bank has got a debit balance, bank is classified as an asset. And therefore, in your statement of financial position, it will appear under your current assets, under cash and cash equivalents. However, your bank account can also have a credit balance. And if your bank has got a credit balance, it is listed as a liability. And this is where you will show it. So if bank has got a credit balance, you will indicate it there. The third category that you can get under your current liabilities, guys, is called the current portion of our long-term loans. That I will also explain to you guys in the next lecture. So don't worry about that now. So you take the three items over there, you block that then, add it up, and that will give you your total amount then of your current liabilities. So the bottom section, guys, the bottom section of your statement of financial position is called total equity and liabilities. You take the equity amount plus the non-current liabilities plus your current liabilities, and you get an answer. And that is the bottom section of your statement of financial position. And that is then called total equity and liabilities. Okay. Right, guys, I'm going to apply all of this now, guys. I'm going to apply this now. The bottom section we are going to focus now on, which is called equity and liabilities. And we are going to go to that quickly, guys, and then we will see how we will then record that in the books of the business now. Right. So the bottom section, guys, is called equity and liabilities. We will first speak about our equity. Equity consists of capital. The capital amount, remember, we calculated that already in our statement of changes in equity. I just want to make sure I get that item down so that I don't make another mistake. And that amount of capital was 311,800 rand. We block that and we put that down as our capital amount. Capital is also our equity amount, 311,800. We take a look now, guys, at our liabilities. And under our liabilities, we've got two kinds of liabilities, non-current and current. Under your non-current liabilities, we will show your loans. We have got a loan here, a mortgage loan from Perm Bank and that loan was 450,000 rand. We block that, and that is our total then, guys, for our non-current liabilities. So you show your non-current liabilities then as 450,000 rand. We speak about our current liabilities now, guys. Take a look at our current liabilities. Current liabilities will consist of trade and other payables. Remember now, your trade and other payables, guys, will normally be your trade payables control account, your accrued expenses, and your income receipt in advance. Accrued expenses and income receipt in advance, those are adjustments that we must still that I must still explain to you. So our trade and other payables will only be your trade payables, which is 33,000 rand. You block that amount, guys. And that will give me an amount then of 33,000 rand as my current liabilities. So I've got my three answers now, guys, at the bottom. I've got the bottom section will then now be called total equity and liabilities. The bottom section is then called total equity and liabilities. And the total equity and liabilities will then be the equity of 311,000 plus the non-current liabilities of 450,000 plus your current liabilities of 33,000 rand, and the bottom section is then called total equity and liabilities, and your total equity and liabilities, if you add that up, will be 794,800 rand. That is your answer then for the bottom section, guys. And you can see that the bottom section of 794,800 is then equal to your assets here of 794,800. And in this statement, you have now proven that assets is equal to equity and liabilities. Okay, guys? Right, guys. So that will take care then, guys, of the first lecture that we had here, guys, the first online lecture for FAC1501. And in this lecture, the focus was just on the format of your financial statements. Remember, just to summarize this, we have got three financial statements that you must be able to do. The statement of profit and loss and other comprehensive income, statement of changes in equity, and you must be able to do a statement of financial position. To do these statements, guys, the information that you will get in a question is that they will give you a trial balance plus additional information. You must bring into account the additional information, and importantly, you must know the formats of your financial statements. In today's lecture, we only focused on the formats. In the next lecture, we are going to take a look at the adjustments and how the adjustments will impact on our financial statements. Okay, guys, that's the end of my session with you guys. I hope that you guys enjoyed it and that you at least perhaps learned something. I will put up the solution. I will email the solution to you guys once again. And then remember now, if you want to communicate with me or you have got any questions, please put it for me, guys, on send it via email. The email address, once again, FAC1501 S1 2020@gmail.com. Okay, thank you. Bye.
Thank you. Bye.
Okay, good day. Okay, good day.